Let us have understanding that say what are the learning points that we have say in the new chapter called treasury and cash management. You do not have to write anything, let me explain you. In this chapter we have basically three learning points. First of all, we are going to have learning of a point that is called preparation of cash budget. That is the first one. Then we are going to learn a concept called float period, lockbox system, concentration banking. And lastly, we are going to understand cash management theory. So these are the three concepts that we are going to learn. What is float period? What is lockbox system? What is cash management theory? All those things I'll discuss slightly later on. First of all, I would like to focus on the point which is called preparation of the cash budget. That is what say we are going to have the initial discussion, and gradually we are going to have say the further learning of the different topics. Dear students, over here we are going to have the learning of certain things in this way. I request all of you to pay attention, do not write anything. In respect of the cash budget, we are going to have learning of the points like this. First, why do we prepare cash budget? And second, how do we prepare cash budget? We are going to have say the learning of both of them. I am discussing first of all with you that say how do we prepare the cash budget. Cash budget is say prepared taking into account forecasted transactions affecting cash. Cash budget is prepared by taking into account the forecasted transactions affecting cash. Any of the transaction which is going to have say the impact on the cash, it will be considered say for preparation of the cash budget. Usually on monthly basis, cash budget is prepared. So what will happen, friends? We will be having say the usually preparation of the cash budget on monthly basis. Like for example, we'll prepare the cash budget starting from January to June. Then in that case, January, February, March, April, May, June. For this time period, we will be having say the forecasting of the cash receipt, and we will be having forecasting of the cash payments. Usually, opening balance of the January month will be provided to us. We'll add a receipt to it, we'll deduct the payment from it, and then we'll have the forecasting of the closing balance of January. That would be the opening of February, closing of February is opening of March, and that is the way say the cash budget is prepared usually on the monthly basis. In preparation of cash budget, we will ignore depreciation. Why? Because depreciation is a non-cash item. You don't have to write anything. Let me explain you. We will ignore depreciation. We will ignore the goodwill written off, preliminary expenses written off. So any non-cash item will be ignored in preparation of the cash budget. Then we will ignore the bifurcation of a transaction into revenue and capital. So basically what happens at, say, whether you receive an amount due to sale of the goods, whether you receive an amount with the issue of equity shares, whether you receive an amount with the sale of any fixed asset, all of them will be considered. Similarly, all the payments, say, will be taken into account. We do not have to bifurcate a transaction into, say, the receipt and payment basis. That is, say, the revenue and capital. Fourth, dear students, it is required to be prepared, say, usually, say, in a simple table format. We will be having, say, the table like this, in which we start with the opening balance. We mention as per the information given receipts, as per the information given payments, and based on that, say, we'll have the closing balance. So basically we will be having, say, the opening balance, closing balance, and the individual receipts and the payments that we will have. Whatever the closing balance that we have on the monthly basis, so that will be carried forwarded as the opening balance of the next month. And this is the way we will be having, so, the closing balances to be calculated. So what I want to tell you is that, say, as such, there is no format which is required to be prepared, is required to be followed. Say usually it is a simple table format is required to be followed. Next is that, are we supposed to prepare any working notes? The answer is specifically no. Let's say you don't have to specifically prepare any working notes. As per the requirement of the question, you may have to prepare it. Because number of times what happens, that say some information is missing in the question. So to find those items, you may prepare the working note. The second thing that, say, may happen, that, say, you prepare the working note for, say, any of the information, say, which is split over more than 1 month. Like if at all you are making the payment of the wages, say, on, let us say, half monthly basis, then in that case, say, you are required to prepare a working note. You may need to prepare a working note. The collection of the sales is spread over more than 1 month, then in that case again you may prepare the working note. So that is the way, say, you may prepare, you may not prepare as per the requirement of the question. So right now I am discussing with you, let's say, how to prepare the cash budget. It is prepared based on the forecasted transactions which affect the cash. Usually it is on monthly basis, not mandatorily. Cash budget is prepared. So something like this for the time period. Preparation of the cash budget, in that we will ignore non-cash items and we will ignore the bifurcation. All the transactions affecting the cash will be considered. And we understand that, say, a simple table format is required to be followed. This is what we understand is the answer to how it is prepared. Now, why do we prepare the cash budget? I am discussing that with you. Cash budget is prepared for the purpose of the proper planning. As I told you that, say, we will compute the forecasted closing balance, say, at the end of every month. It may happen that, say, the March month closing balance is negative. Anybody can write in the chat box that what does the negative closing balance of the March month is indicating. So friends, we understand over here something like this. that if at all the closing balance is negative, then in that case it is indicating the opening balance of the March, receipt of March are insufficient to cover the payment of March. That is what we understand. I repeat that opening balance of the March plus receipt of March is greater than the payment which are becoming due in the month of March. So in that case, say we will report this kind of the negative balance to the management, and will tell to the management that say during this month we are likely to have the expected shortfall. Whatever the shortfall which we are expecting, so that we can cover up. How we can cover up? Either we can have the postponement of any payment. If possible, we'll try to postpone any payment. For example, it is a partnership firm and the partners are going to have the withdrawal over here. We can tell the partner that say you may postpone your withdrawal, so we can have the internally say no shortfall of the balances. At the same time, it may happen that say we try to say prepone any of the receipt, so that say what will happen, say again say we can like avoid the shortfall. Again the partners are going to contribute the capital over here, so instead of contributing the capital later on, we can tell them that say you say introduce the capital at this point of time. This is what say we understand is a kind of say the adjustment that can be made. Suppose neither of the adjustment is possible, then in that case what you can do, you can borrow funds at competitive rate of interest. You can very well understand if at all you are having say the sudden borrowing, you have say the unplanned borrowing, then in that case definitely the lender is going to charge say the high rate of interest to you. But instead of that, say if at all you are able to manage the borrowing in a planned manner, you are having say the time to borrow funds, then in that case what you can do, you can bargain for the rate of interest, and you will be able to say reduce your cost of borrowing. So this is the advantage that say you have say for the preparation of the cash budget. So why do we prepare? For the purpose of planning. Second, it may happen that the closing balance is substantially more than required. The closing balance of the April, May, June is substantially more than required. Then what we can do, friends, the excess closing balance, listen carefully, excess closing balance say can be invested, and say we will be able to earn say the interest on that surplus. Suppose we require approximately 50,000 60,000 only for the purpose of meeting with the requirement of the funds. However, we are expecting that say we will be having the closing cash balance of 5 lakhs over here, 9 lakhs over here, let us say 12 lakhs over here. Then the excess funds can be invested and you can earn interest income. Or otherwise, we can make prompt payment, we can make early payment to the supplier, and we can get the advantage of cash discount. So for the purpose of planning, say we are preparing the cash budget. So how it is prepared is what say we have discussed, and why do we prepare is what we have discussed. I request you to write down answer. Treasury and cash management. In that, write down learning points of the chapter. In that, write down preparation of cash budget, Next, write down float period, lockbox system, concentration banking. And third, write down cash management theory. I request you to write down new heading, preparation of cash budget. In that, write down first point. I'm sorry. In that, write down how cash budget is prepared. In that, write down first point. Usually on monthly basis, comma, taking into account forecasted transactions affecting cash. Cash budget is prepared. Full stop. Second point, cash budget is prepared ignoring the fact that cash transaction is of revenue or capital in nature. Third, cash budget will be prepared ignoring any non-cash item like A. Depreciation, B. Goodwill, or preliminary expenses written off, C. Profit or loss on sale of fixed asset. Fourth point, it is prepared in a simple table format, comma, we will prepare any working note if required. Full stop. For example, for any missing information or for any information of collection, comma, payment spread over more than a month. Full stop. Depending upon information, comma, we have to prepare working notes. Full stop. Now I'm dictating with you, that is a dictating to you. Let's say why cash budget is prepared. I request all of you to have understanding when you are writing the notes. Not only that so you are writing robotically, but you try to understand what I have dictated to you. So usually I explain and then I dictate. Why cash budget is prepared? In the write down first point, for the purpose of short term planning, comma, cash budget is prepared. Second point, in case of projected closing balance is negative, comma, the company would write on A, delay any payment, B, prepone receipt, C, borrow funds at competitive rate of interest. Third, in the write down, It may happen that projected closing balance is more than required, comma, in that case, excess cash balance can be read on A, used for making early payment to supplier, to avail cash discount. B, used for investing to earn interest income. Full stop. So these are the reasons with which, say, the cash budget is prepared. That is what we understand. So I have covered the initial point, how it is prepared and why it is prepared. There can be a theory question also on this point. Then in that case, you're required to write like this.